Good morning to all traders and welcome to this Markets Insight video today on the 2nd of November. So as we emerge from the final weekend before America decides on who's going to be in the White House for the next 4 years, both Trump and Biden are pushing for their final rallies in key swing states as their campaigns come to a close. Whilst all this is going on, however, China has emerged as the engine of global growth as the Chinese economy has witnessed a vigorous bounce back. China is the only big economy expected to show a positive advance this year, with the IMF projecting growth of 1.9%, followed by a potential 8.2% in 2021. So it seems that the Phase 1 deal between China and America was not needed after all, or not necessary, let's say. Meanwhile, in the UK, Prime Minister Boris Johnson has announced a second stay-at-home lockdown across England starting this Thursday, and that will run for 4 weeks consecutively as the second wave of the virus continues to run out of control, not only in the UK but across Europe as well. Also on Saturday, Austria brought in a second lockdown of its own, while Greece declared a partial one. The new measures came just a day after France started its second lockdown, and Belgium said it would tighten its measures as well. All the economies agreed to act now before the intensive care units in hospitals really start feeling the strain as we approach the winter months. So what I want to start off today is looking at a couple of FX major pairs. The first one would be pound dollar, which I've been very interested in. Been following it for a few months now, actually, since we've seen a pickup after the post first wave, let's say, of the coronavirus. So we've had here obviously the coronavirus, the first outbreak, and we've pushed up to a yearly high. So it's gone above and beyond the recovery of what a lot of analysts thought it would do in the markets. But now we're seeing a bit of a slowdown. So this is the beginning of September where we saw a bit of a second wave progressing. And now with the assistance of the Ichimoku cloud indicator, we're seeing prices now being very much engulfed in the cloud. An attempt to break up through the top board of the cloud has seen a progressive downward spiral in the last few weeks. So what I want to focus on at the moment is if we can break past this downwards bias. So what I want to do is just put a small Fibonacci in from the high recently to the low, and what I can see here at the moment, we've gone past a lot of the levels, and I'm just seeing now we're trading roughly about the low 129s. I'll be looking at 128 approximately, which isn't a bad psychological level to keep pushing downwards, depending on the negative news we're going to hear out of the UK. Don't forget, we've also got Brexit negotiations, which aren't going very well, or they've been a bit hit and miss, let's say. We're hearing reports that Brexit talks are going well, and then they come to a bit of a stalemate, and then we're getting more reports that there will be a deal before the UK officially comes out of the European Union. So there's a lot to take in for the UK at the moment. We've got some news coming out later this week with the Bank of England as well. So it'll be interesting to see if we can actually drop down to 128 and then potentially to the recent low of the mid to high 126 region, which will be another psychological blow for the sterling. However, on the upside, there's always upside potential. If we can keep prices close to the cloud, there's no reason why we can't have another attempt of roughly about the 130 zone, which is about here, and this will be between the convergence and baseline of the Ichimoku indicator. So I'll be looking in the next couple of days with the news coming out of the UK as well. Obviously we've got the lockdown starting on Thursday. This is another detrimental effect on the economy, and we'll see how the UK can cope with this in the next few weeks as well. And another currency I just want to take you through quickly is the dollar CAD. We've got some PMI data across the globe later today, Canadian being one of them, and dollar as well. So we've seen again the downside bias from the recovery of the pandemic on the dollar Canadian pair. But I just want to zoom in again, as I usually do, on the most recent areas. So what we're seeing at the moment, we've got this downside and then this choppiness, and then we're pushing higher. But the main significance is this kind of quadruple top here that we witnessed in September. It had another attempt on the upside recently. It was a bit false, and now it looks like it might be progressing again to that price as well. So we're looking at roughly about the 134 area at the moment. not seeing too much of a divergence on the indicator. So I'm expecting prices to probably start trading up at this area here at 134. If we can break away from the top border of the cloud completely, then we can see a bit more bias on the upside as well. So I'll be looking for this in the next few trading sessions as well, and just to see what the potentials are. Obviously it might shake up the US market for sure with the presidential debates tomorrow. Will we get a result by Wednesday? A lot of analysts are saying that it's not likely at the moment, which could lead to more uncertainty as we go into, let's say, a delayed ballot reading. So this could shake up the markets even more. So it'd be very interesting to see if we can get up to these levels, or if it can again get this choppiness and push back down to the top border of the cloud. So very interesting to look out for the next few trading sessions. So that's all for today from the Market Insights. Thank you very much for joining me, and if you have any comments, feel free to post them on the video and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.